2020 has easily been one of the most interesting and volatile years that the stock market has ever seen. September 2020 was nothing less of that. We've seen some highs and we've seen some lows. And going into October 2020, we can, in my opinion, expect to see the same thing. But to say that though, volatility does bring opportunity, and opportunity is something that we capitalize on here as much as we possibly can. My name's Tyler Hill, and today we are going over 3 stocks that I believe are going to perform really well and should offer some very, very interesting buying opportunities in the month of October 2020. The very first stock that we're going to talk about on this list is going to be Target. So Target has seen some incredible results, especially over the last quarter. In fact, in the second quarter, Target's comparable sales jumped 24.3% and its earnings per share doubled. Now, one reason that I believe Target is going to be a very strong buy in the upcoming days, especially in the upcoming month, is the fact that they have done such a very good job of adapting to this new environment. One thing that we can take a look at to understand the full potential that this company has and how well they have adapted to this new environment is if you look at their 2 services, shipped and drive up. Same day fulfillment is something that a lot of companies are taking advantage of because the market for same day fulfillment services is very, very broad. People are absolutely loving it, and if people can start to get things in the same day, they will immediately become a very, very interested person in general. But as a consumer, they are definitely going to be interested in these companies that do offer it. Same day fulfillment services have jumped over 273% and actually have been the driver of 6% of comparable sales for Target in itself. And so that there alone will just show you how well they've been able to once again adapt to this new environment and really start to figure out, okay, what is exactly best for our company and what are some things that we can do to take advantage of the opportunities that are given to us in a time when a lot of people are in need, especially of same day services. Now, another reason that I believe Target is going to be a very strong buy is that in a situation like this, they've really shown their strength and they've really shown why they have such a wide availability to a lot of different consumers. Not only do they just sell food, but they also sell groceries, retail clothing, and a whole bunch of different options that can appeal to a lot of different people. The Target that is here in my home city sells games, gaming consoles, electronics, food, clothing, like just your average day groceries, and a wide variety. Pretty much anything that you may need is for Target. Now, the reason that I believe that this can be super important is that in a time like this, which I do believe that we will see another time like this, is that they show that what people need, they have. They are readily available to give you basically anything that you need at all. And that's something that gives me confidence as an investor, because I don't want to, invest my money into a company that I believe is only one-sided. And if that one side goes down, well, obviously the company goes down as well. If we're going to go ahead and we're going to invest this hard-earned money that we've worked really hard for, we want to make sure that we put it into something that's stable and strong. And that's something that I believe Target is, especially since they have such a wide variety of options and products for consumers to buy. Now, one reason we can see Target doing very well in the foreseeable future is that a lot of people are starting to adjust to this at-home style. At-home workouts is something that is doing very well, and that's something that Target is taking very, very, very big part in, and that they're starting to see a very big increase in their home apparel wear. Now, they have recorded seeing double-digit growth in their market share of at-home apparel, and that is that's something very extreme and important to look at, because if Target can continue to grow these small side pieces of their business, it will eventually grow into a major piece, and the more major pieces that they have of their revenue is obviously going to make them even more stable and more, revenue driven in the future. Now, one reason that I do believe that this is going to be important is that they are staying up to date with everything going on in the future. And we cannot forget that holiday season is right around the corner. I know a lot of states are starting to actually get back in the holiday routine. I know some states actually aren't canceling Halloween and things like that. And as we all know, Target does definitely take a, big advantage of that. They make a lot of money going from, holiday apparel, holiday costumes, food, candy, and all those types of things is a major driver. And, that increases their revenue a lot in these very specific months in which holidays are a very big thing. So with that being said, I do think in the foreseeable future that they will then take advantage of the upcoming holidays as they usually have. And that will then increase the revenue they're getting already. They're already doing an amazing job at growing their business. Now, whenever you take this extra money, basically at this point, that they will start to get from, Halloween and Christmas and Thanksgiving, I think that's going to be a very major player. And we can definitely expect to see a huge growth in revenue over the next couple months, in my honest opinion. Now, the final aspect of Target that I did want to mention is the fact that they're a dividend aristocrat. They have increased their dividend for over 25 years, and the dividend yield is sitting somewhere around 1.7%. 2%. So if you are a dividend investor and you are looking for a very safe and stable company who has a lot of products in which, you won't have to worry about one product going down and tanking the entire company with it, Target could definitely be one to check out, and it could be very worth researching and doing a possible investment one day. The second stock on this list is going to be FedEx. Now, you may question, FedEx? Really? FedEx hasn't, it's not big news. It's not something that a lot of people are talking about, but it's honestly more of one of those things that if you get kind of realistic and you think about what's going on in the world right now. The majority of businesses are focusing on online commerce. Not many people are going out. They're not going necessarily to malls. They're not going to shopping centers. They're doing a lot of their business online. Now, in that light, what are some businesses that are going to take advantage of that increase in online buying? Well, of course, it's going to be the people who ship the product to the consumer, because the consumer is not going to get the product themselves as much anymore. They need someone to send it to them. And who does that? FedEx. So the reason that I believe FedEx is going to be one of the very, very, very strong buys of October is that they are really starting to take advantage of this new movement and this new movement to the online shopping industry. Now, one major thing about FedEx is we have been seeing them start to work on their margins and create a bigger margin between the profit and the cost, and it is actually getting very great. They're starting to do things that are being more cost effective, and with that being said, that obviously brings more revenue into their pockets, and since they do pay a dividend, well, that does bring a little extra cash into the investor's pocket as well. Now, FedEx has noted that they have seen a significant amount of increase in residential deliveries as of late. Residential deliveries actually accounted for 72% of the total domestic deliveries in the United States in Q4 2020. Now, this is very significant because if you look at the prior year, the number was only at 56%. So we've seen an increase of 16% in total residential deliveries, and that's pretty much what we talked about earlier. People are ordering much more online as of recent, and the fact that people are starting to really just think, they're starting to understand it. I would say that's the easiest way to word it. They're starting to really understand how much more simple it is to just click a button, boom, and it's there almost the same day. Like we're talking about Target. Some of these same day deliveries make people's lives so much more convenient. And there are a lot of people out here who are still a little bit worried about COVID. And so with that being said, they don't want to get out. They don't really be around people. I honestly can say that I've kind of gotten used to being in my own space. And so it's just a little bit more convenient for something to just, me just press a button, boom, and I can have exactly what I need at my doorstep in a few hours. So with that being said, once again, FedEx has seen clear, major growth in their residential deliveries and delivering these packages and all of these online orders to new consumers. Now, one thing that you can note about FedEx is that they're taking advantage of the fact that oil prices and fuel prices are much lower nowadays than they usually are. Clearly, we've seen the oil field been taking a hit recently, and with that being said, that's created a lot lower oil prices and gas prices. This does benefit FedEx, though, because they're paying less money to fuel these trucks. The less money that they have to pay to fuel these trucks, the more extra money that they have that they could then maybe reinvest into the business and create this big expansion in the margins, or they can take that money and maybe grow a dividend and pay it out to their investors. So it is, pretty important to note that they are taking advantage of these lower costs of gas to fuel their trucks. Now, FedEx does pay a 1.02% dividend, which honestly is not that bad, but it's more important to note that they are starting to really see the growth that they've been looking for all year. The fact that they've been doing as well as they have over the last couple months honestly in an economy that's not doing that well is very, very important to note, because as the economy does continue to reopen, a lot more businesses are reopening, and with more businesses reopening, that means there are more products and more products to be sent to these consumers. So I do believe that we will start to see FedEx really start to benefit from the reopening of the economy, and I would not be surprised if their numbers just completely go off the charts over the next months to come. Nike is the very last company on this list, and Nike is a company that I believe is going to do absolutely phenomenal coming towards the end of this year, as they have already seen major growth over the last couple months. Nike reported an 82% increase in online sales in the last quarter. Now, this is significant, but at the same time, it can be expected. Obviously, a lot of stores did close. So what happens whenever stores, in-person stores close? People move to online. The reason that I do believe that this is significant, though, is the fact that people are staying loyal to their brand. Whenever you look at a whole bunch of other companies, they have Adidas and Puma, and they have Nike and Under Armour, but people really they're really loyal to Nike. It's something that I've noticed. Like, once you start to wear your Nike shoes, your Nike shirts, your Nike dry fits, people stay pretty loyal to that because it's a quality that not a lot of companies can match. Now, there are companies out there who do make great quality content, but at the same time, it's not going to be the exact same as Nike, especially when it comes to Nike dry fits. Nike dry fits are something that I wear, and I'm very loyal to the brand. And so it's just an example as to why people are sticking to Nike. Now, one reason that I do believe that they are going to continue to do very well is the fact that they have seen a growth of 200% in their women apparel apparel industry. Now, we can accredit this a lot to the same thing that Target was going through. Nike took advantage of the fact that people are working out from home, and loads of people loaded up on workout gear, just work out at their house to go run. And Nike is one of the companies that you first think of whenever you think of workout gear. Now, I don't believe that this is going to be something that changes, and I feel like a lot more people started working out during this pandemic because there was really nothing else to do. So with that being said, people started to go and they started to get running shoes, running shorts, your dry fits or your tank tops. And Nike is a direct producer of all of those items that people really, really needed. So one thing that I do believe is going to continue to happen is that people are going to continue to need these items, especially now that they've become pretty accustomed to it. It's become an everyday thing, and people are really, really, really loving the at-home experience. Now, one reason that I do believe that this will continue on into the future is that people, once again, they're just used to it. Once an entire society starts to create these different habits, such as online spending and ordering things online, it's going to be very hard for them to break. One thing that I have noticed is that a lot of gyms are struggling because people have just kind of gotten used to being at home. Since it's been months since a lot of these gyms have been open, so people already have all the things that they need, all the supplies and the equipment. So why go out into public if you don't really need to, if you can do it from home? Now, though that may, hurt gyms, it benefits companies like Nike because they are direct producers of these at-home needs. Now, the crazy thing to note is that in August 31st, that they did report an increase in revenue to $1.56 billion or 95 cents per share. In the previous quarter, that was $1.37 billion and 86 cents per share. So they are doing absolutely phenomenal. Once again, in an economy that's not the best right now. As people start to really hone down for the winter and they start to order all the long sleeve Nikes that you see, I probably got like 10 of them in my closet. I do believe that Nike's revenue is going to continue to climb. There's no reason at this point that I think that they will not climb. And the fact that people are getting a lot of online supplies and all of these different things from Nike shows that they are very, very major producers and people are wanting all of their products. Now, this might sound redundant and I feel like I might be repeating myself, but it's just very important to note these things because this is the main center of Nike's business. Now, we can also note that in the upcoming quarter report that back to school is also going to be in that. And a lot of people, the majority of people I know in middle school and high school wore Nike shoes. That was about the thing, especially when I was in middle school and high school, and I haven't seen that change at all recently. There are people going back to school, and I know that back to school shopping is something Nike always looks forward to. Now, I don't believe that it will be as big as it was last year, considering a lot of schools aren't open yet, but we can expect to see a little bit of growth there for sure. And I do believe that the next quarter report earnings is going to be absolutely phenomenal. So Nike can definitely be a company to look forward to and, just continue to watch this thing grow. The fact that they have been around for as long as they have and continued to put out products that people love absolutely blows my mind. They continue to be up to date with the modern day athletes and have these athletes as sponsors for their brand that really speak to the public, these athletes that a lot of people look forward to. And, it really makes people absolutely love the brand and the company itself. So in the future here, I am definitely going to be looking out for these three companies, and I really do expect them to do great things. Once again, I am not a financial advisor, and this is not financial advice. This is just my opinion on what I think is going to be a good thing coming in the future here. If you did enjoy this video, once again, smash that like button. It definitely helps me out, and it helps me get my word out to as many people as possible. If you did like my content and you do like my channel, you could let me know by subscribing, and you could let me know what you would like to see from me in the comment section. Until then, though, I will see you guys next time. Peace.